Hello everyone, my name is George Gao. I'm with Acres Realty. Today I'm going to talk to you about 2 or 3 deals that I saw online that I thought are interesting. So just a quick disclaimer, this is for entertainment purposes only. These are not our listings. We have no monetary association with any of the listings I'll be talking about. They come from public sources like Zillow and HAR.com or LoopNet. Sometimes they're brokers listings. So for example, these are just then it may or may not be sold already by the time you hear about them. So second of all, I'm a deal guy, not a rehab expert by any means. So I'll make general assumptions about expenses and rehab costs. So work with a real estate professional inspection company to make rehab estimates. And lastly, so I'm not a expert on all the markets. I live in Houston, but I don't know all the neighborhoods all that well. So do your own diligence and don't rely on the information that I provided here. So here we go. That being said, the first deal I'm going to talk to you about is 6606 Lockwood Drive. It's in the Trinity Garden area in Houston. It's 8 unit. That's what kind of piqued my interest. It's 1950 built, a little bit older property. I think the previous owner bought it 4 or 5 years ago. They came in, did a bunch of work, and they want to flip it. So they're asking for $499. So it's about $92 a square foot. According to the agent, the rent's about $800 per unit per month. And they have 4 3-bedroom, 3 2-bedroom, and 1 1-bedroom. So it's a pretty good unit mix. And so the average yearly income is about $75,000 right now, as is. And on that property, according to the description, the only thing the owner pays is electricity. So the only thing tenant pays is electricity, and the owner pays for the water and trash, as well as the insurance and taxes. So the expense I estimate is about 25 to 30%. That's about $19,000-$20,000 a year. That leaves us about $56,000 of operating income per year, which is about 11% cap rate based on the $499 ask price. They said there's no major rehab on the property right now, and if investors come in and they have a 75% leverage, it's about 20% cash on cash return on a yearly basis, which is pretty decent. So the pros on this deal, there's the financials are pretty attractive. The downside is it's a little bit older property, and then when I drove by a couple months ago, it's a C-class neighborhood, so I think there will be people that kind of that's why it's still in the market. I think the people didn't like the neighborhood so much, or because of older property. So that place is worth looking at. Second property is one in my neck of woods, is 1014 Three Forks Drive in Katy, Texas. It's in a neighborhood called Silverstone, 1980 built, so more recent. Asking price is $155,000. The property I think was 1,300 square foot, so it's about $117 per square foot, which is pretty reasonable in this area. And according to the comps I ran, I think people are asking about $1,500 in that per month in rent. It's about $1 per square foot, and so it's about $18,000 to $20,000 in yearly rental income. And the only thing that the owner pay on this kind of property, single family property, is really the repairs, obviously, and then the taxes and insurance, and just account for any vacancies. So it runs about 35 to 40%. The tenant pays for all the utilities as well as landscaping typically. So you're looking at about $10,000 net operating income. We don't really talk about single families in terms of cap rate, but just to compare apple to apples, this is about a 7 cap. It's about lower cash on cash return because you're paying $155,000 for a single family. But the upside is it's a really class A, B neighborhood. You don't have to worry about, it's less crime, and much lower return as a result. But it's a very stable property. Deal number 3, it's a self-storage facility that's all on LoopNet. So it's 9489 College Street in Beaumont, Texas. It's about an hour and a half away from Houston, where I live. And it's 66 units. So in terms of self-storage units, it's on the smaller side. You see it nowadays, public REITs come in, build 200, 300 unit automated facilities. So this one's a mom and pop owned, so it's more manual. They have a gate code, and all the doors are just regular locks on it that the tenant bring themselves. They're asking $399,000 for the 66 units, which is about $49 per square foot according to the website description. They said they have about 8,000 square foot of commercial space on there. And, you know, in that area, according to the comps, about, I think they have some 5x5s and also 10x5s, some 10x20s, which are more attractive. I don't know what the exact unit mix in that facility is, but it's about $60, $65 per unit per month. So you're looking at $47,000 to $50,000 in rental income. And for a storage facility, the good thing is you have less expenses. So whereas multifamily, you're looking at 35 to 40% expenses, on self-storage, it's typically lower, like 25 to 30% on the expense ratio. So we probably estimate about $35,000 per year in net operating income. So it's about a 9 cap on assets basis, just based on my estimate. And it's about 13% cash on cash return based on 75% leverage. And really the pro is it's a self-storage facility. It's stable with tenants in there. You don't do a lot right off the bat. Obviously there'll be things that you can improve on, like, you know, automation, cameras, and probably need a fresh coat of paint. But and a good location. It's right off the pretty busy highway there. And but on the other side, it is a smaller property, 66 unit for self-storage. And I think there's more competition coming in from the bigger players in that area, as the Beaumont's been a growing marketplace in the last 3 or 4 years. A lot built up for self-storage, so it is pretty competitive. So hopefully you guys enjoy that. Just the 3 deals that I saw that might be interesting to you. If you have any questions, give me a call. I'll be happy to chat. So thank you, and have a great day.